then let me check the homework. Homework. Okay, it is 병철 and only 병철 and 현정 submitted homework. Okay, what happened to other students?
I'm confused, so I bring my source by using my USB. So
Okay, could you please send that file? Okay, okay, could you please copy and paste your source code to this discussion board? Okay. Okay, let's go one by one. 병철, you pretty nice program. Okay. And actually, I think I send you email. Yes, there it is. We can make function as an input variable as well, like this. So f is function, and in fact, yes. So something like. Yeah, I know, you know what I mean, right? Yes. So here you define the function and put this function inside of the integration operation here, I think. But actually you can put this on one of the arguments. Okay. That's actually more general in some sense. Looks pretty good, okay? And 현정, your is okay. It didn't work, right? Okay. So 병철, why don't you explain your source code? Try to explain, okay? So by the way, could you please raise your hand if you didn't learn calculus in high school? Okay, you 2, you 3. So you learned calculus in high school, okay?
I didn't. Sorry, my voice is lost.
No problem.
I didn't learn calculus in high school, but I'm taking calculus right now.
Okay, that's great. That's very good idea. Okay. So anyway, why don't you try to learn this program? Actually, you can learn this program in Excel.
Hi everyone. My approach is, I think it's kind of simple because I just define my.
Just a moment. The font size is too small. That's why I hate Explorer. Okay. Why don't you copy and paste to MS Word and blow up the font?
So first I defined my function in that I want to. This is a function that I want to integrate like this. I want to make it simple, like this. So the graph maybe looks like. So the way. So the idea is calculating the Riemann calculating, I mean, integrate with the Riemann something. I don't remember. So actually, so if there is one rectangular, the integral will be, if x is 1 and so this space will be 1, and second way is divide x into 2, so like this, and we can calculate this 넓이, original 넓이 area.
Yeah.
So this will be 1.
So basically we don't have any internal still. If you are speaking Korean, you can.
예. 한국말로 하겠습니다. 영어랑 어려워서. 이게 그 리만 어프로치가 이걸 사각형으로 계속 x를 이렇게 세세하게 나눠가지고 그 적분을 하는 건데요. 기본적인 원리는 간단하게 설명을 하면, 처음에는 만약에 하나를 구하면은 이게 넓이가 1로 나올 거고, 만약에 두 개로 나눈다면은 0.5 더하기 0.5. 그래서 제가 산수를 잘 못해가지고 0.5, 그게 x가 0.5고 0.75? 또 여기를 계속 나누면은 이런 식으로 계속 나누면은, 만약에 이걸 무한대로 한다고 하면은 사각형을 최대한 작게 쪼개지면은 우리가 여기 넓이를 갖다 곡선이라도 정확히 구할 수 있잖아요. 그걸 갖다 이제 프로그래밍으로 구현을 하는 건데, 일단은 이게 펑션을 인풋으로 들어올 수 있는데, 이렇게 따로 인풋으로 저같이 이렇게 디파인 안 하고 인풋으로 넣어도 되고요. 넣는 게 더 이제 좋은 방법이고, 위에 거는 제가 이렇게 만약에 0부터 1까지 접근을 하고 싶은데, 만약에 거꾸로 인풋이 1, 0으로 들어가면은 좀 계산이 약간 좀 뭐 이렇게 틀리게 나오는 건 아닌데, 약간 규칙을 좀 갖고 싶어가지고, 만약에 처음에 인풋이 2보다 크면은 다시 넣을 수 있도록 에러 메시지를 표시하도록 그냥 넣은 거고요. 그 다음에
Why do you need the coefficient thing? It's a regression, right? The coefficient L and the second.
actually I don't know how it works this function. I just copy and paste
Oh yeah,
and
it's the regression.
modify.
Anyway.
그 다음에 이 x3가 뭐냐면은, 여기 만약 1당 여기 나눠주는 다각형 수예요. 그래가지고 0.0001이면은 1당 10,000개. 그러니까 여기가 다각형이 하나, 둘, 셋이나 다 10,000개가 계산된다고. 그래서 만약에 좀 계산이 오래 걸릴 것 같으면은 좀 줄이거나 이래도 되고요. 정확하게 계산하려면은 더 낮게 누르면 되고요. 디스트라고 하는 이것은, 만약에 이게 1이 아니고 2일 수가 있잖아요. 근데 1일 때도 10,000개로 쪼개고 2일 때도 10,000개로 쪼개면은 여기 좀 일관성이 없으니까, 만약에 2가 될 경우에는 20,000개로 쪼개야 되잖아요. 그래야지 그 일관성이 있으니까 그 숫자, 거기 있는 다각형 숫자를 계산할 수 있도록 해놓은 거거든요. 그래서 만약 인풋이 x가 이번 제가 넣은 게 1이고 x1은 0이니까 1. x가 1이고 0이면 1이고 x3는 아까 0.0001을 넣었으니까 디스트가 많이 되죠. 많이 되고 만약에 x2가 내가 0부터 2까지 접근하고 싶다 그러면 x2가 들어가면은 이 분모가 2가 되고 또 아까 그 0.0001을 또 반으로 나누니까 그 숫자가 반으로 내려가잖아요. 그러면 요 숫자가 2배만큼 켜지니까 그때는 2만 개의 이제 사각형이 계산되도록 이게 디스트가 결정이 되는 거예요. 거기 따라서.
What if this is non-integer? Like x2 is 0.77 and x1 is 0.71. In this case, the distance is not integer. Suppose I want to do the integration between from pi to 3 pi. What's going to happen in your program?
I didn't think of. I
Okay,
just.
and you please explain.
yeah.
So that's the problem.
Yeah.
And you let's try. Let's see.
h는 이제 하이트라고 그냥 생각을 해가지고 높이 y를 계산한 거거든요. 여기에 이제 이 간격을 일종의 간격을 구한 거니까 이 dt가 0.00. 이 간격 곱하기 이 높이를 해야지 여기 사각형을 구할 수 있잖아요. 그래서 h는 여기 함수 값이 x 요 값을 넣었을 때 함수 값이니까 그냥 쉽게 x1이 들어갔을 때 그 제가 원하는 그 함수 값이다라고 정해 놓은 거고 k는 여기 뒤에 쓰려고 제가 0으로 그냥 디파인 해 놓은 거고요. 포문으로 들어간 포문은 이제 루프를 계속 반복하는 건데요. i가 x1부터 x1 더하기 디스트 마이너스 1까지 계속 이렇게 루프로 계속 계산이 되도록 해주는 역할을 하거든요. 처음에 i가 x1부터 시작한 x1을 0으로 생각을 했으니까 여기 계산을 하면은 k는 x3 곱하기 h 더하기 k니까 x3는 0.0001 그러면은 요 거리가 되잖아요. 0.0001 곱하기 h면은 요 x1 x1이 여기잖아요. 곱하면은 0이 나오겠네요. 이게 0이 나오고 그 다음에 기존에 있던 k랑 더해가지고 새로운 k 값을 이제 저장을 해놓고요. 그 다음에 m은 그 다음에 m은 왜 설정을 해놨냐면은 그 다음에 이제 요 다음 사각형을 계산하려면은 요걸 다시 계산을 해야 되는데 그 값을 변경을 해주려고 해놓은 거거든. 그러면은 x 값이 여기서 계산됐으니까 다시 여기서 계산되도록 x1 값을 바꿔줘야 되잖아요. 그러니까 한마디로 y 값을 여기서 계산한 건데 여기서 다시 계산하려고 한 거거든요. 그래서 0.000 x1 더하기 x3 이렇게 돼 있는데 x1이 0이니까 0이고 x3는 0.0001이고 그 다음에 i는 아까 x1부터 시작한다고 그랬잖아요. 그래서 0 들어가고 x1 0이었고 플러스 1 되고 그러면은 m이 최종적으로 0.0001로 값이 들어가잖아요. 첫 번째 루프에서. 그 다음에 h를 다시 계산을 하는 거예요. 높이가 이제 처음에는 x1이 0이니까 0으로 들어갔는데 x가 0.0001이면 여기서 0.0001만큼 x가 0.0001일 때 y 값으로 그 값이 변하잖아요. 그럼 그 값으로 h에다가 이제 값을 저장하고, 그 다음에 루프가 다시 끝났으니까 다시 처음으로 돌아가서, 아까 x1이 0에서부터 시작했다고 그랬는데 이번에는 x1에서 플러스 1 되는 이제 값을 또 루프가 계산을 하는 거예요. 그러면은 다시 계산하면 k 값 같은 경우에는 아까 h가 n 값이 0.0001로 들어가면서 h 값이 변하잖아요. 높이가 아까는 0이었는데 0.0001로 들어가면은 요 높이 값이 h로 들어가잖아요. 그거 곱하기 0.0001 요 아까 x 값이 이렇게 곱해지는 거예요. 그러면은 이 사각형의 넓이가 값이 들어가잖아요. 그러면은 기존에 우리가 갖고 있던 k에다가 새로운 여기 두 개를 곱해서 나온 그 값을 더하면은 지금까지 이제 계산된 넓이가 합쳐지는 거잖아요. 그래서 그 합쳐진 값을 다시 또 k에다가 저장을 해 놓는 거예요. 그 다음에 또 m 과정을 거치면은 다시 요 다음 사각형에 해당되는 높이 값을 구해서 h로 저장이 되고, 그럼 그 다음에 또 루프가 다시 처음으로 오면은 기존에 또 저장된 거에다가 새로운 h 값에다가 또 0.001을 더해서 이 사각형 값을 더한 값이 k에다 또 저장이 되고, 또 다시 그 높이가 다시 계산이 된 걸 다시 여기다가 해가지고 그걸 갖다 만약 0에서 1부터 한다면 그 10,000번을 이제 여기 루프로 자동으로 이렇게 계산이 되는 거예요. 그런 다음에 그 값이 k에 들어가는 거거든요. 그 다음에 최종적으로 그 k 값 저장된 게 결과값으로 나오게 하면 이제 이게 적분이 된 거죠. 갑자기 준비를 안 하고 설명하려니까 좀.
So why don't you run this program? Save this code as a source file and run the yeah, temp. Oh, that R. You don't need extension. I think we have to change the file name still. Right? It's still.txt. No, just
이게 그 값을 보여드리려고 한 건데
아,
0.5로 할 경우에는 사각형 1당 사각형이 2개인 거잖아요. 그래서 요만큼 계산하고 요만큼 계산한 넓이가 나온 거예요. 그래서 원래 값보다 근사치가 많이 떨어지잖아요. 그래서 만약에 좀 더 정확하게 구하고 싶으면 이제 이걸 줄여주면은 정확한 값이 나오도록 점점 이제 원래 답이 0.333 이렇게 3분의 1이 나와야지 아마 답일 건데 이게 숫자를 줄일수록 점점 0.333에 접근을 하거든요. 그래서 이제 이걸 갖다 확 줄이면 계산이 하면 0.333에 이제 점점 가서 정확한 계산이 되잖아요. 이런 식으로 이제 그 적분을 계산을 하는 거예요.
Okay, my question is how was to the integration from 0 to pi?
Yeah, I think it's anyway it's work.
It works.
I can.
Okay, so I just
Yeah.
want to check whether non-integer values also.
So I don't know why this program can calculate the pi, but actually it works.
Okay, actually. So almost. Okay. Great. So any question to Byung-chul? Okay. So do you think you can do the integration with R? Okay. So I'll give you one more week. So okay, please try. And but to prevent you from copy and paste Byung-chul's homework, I want to make the problem slightly more complicated. So why don't you make this precision as another input variable? Okay. Right. So as you know, if you use refined rectangles, you will get more and more accurate answers, right? And suppose I want to control the accuracy. So actually, I want to make the accuracy my independent variable, okay? My control variable. So, okay. Of course, if I want very accurate answer, okay, it will take longer, okay, to compute the integration. And if I, of course, try non-refined, very crude, if I construct crude rectangles, then it will be quick. So let us control, okay, let us try to control accuracy of the integration. Any other question? Any question? Okay. And in addition, actually, in Byung-chul's case, okay, in integration, it is also possible that we can make a function as a input variable, actually. So even I think we can so let's delete everything and then let's make as a form, okay? If we do this way, okay, run the source code, then if we make function as input file, then I think integrate like exponential function exp. Yeah, it works. Okay, so right. So in this case, I didn't define, so actually we don't need this part at all in some sense. Not quite. I'm not sure whether it will work, but x square. object x가 없습니다. Anyway, please think about it. There is a way to make function as an input variable. So I have to define the function as like my function is like function, so input variable is x, so like x so I define my own function, and then I can do the integration, like integrate my function and 0 pi. Yeah, it works. Okay. So you can make a function as your input variable, and please try to make this part your control. Try to control the actual value. I think you'll know it. Any question? Do you think you can do it? Please raise your hand if you think you feel incompetent about this homework. So please help each other, okay? I allow to help each other, and one reason why I use Google Group is that whenever a student submits homework, everyone can see the homework actually, right? Therefore, automatically everyone can share the solution. But of course, if you just copy and paste submitting homework, it doesn't help you at all. Right? Please try to do it yourself first, and then and use other students' homework as your reference. I think I can give you another homework to practice R. Okay. Another homework. Okay. Is it too difficult for you? Let me check it. Have you ever heard about Newton-Raphson method? Okay. Then other homework maybe, okay. If you click this link, okay, let me go to the Google group. Okay. New post. Okay. Today is 18. So homework. Okay, this is your new homework. So let's go to the link. So simply you can click this one, or you can just copy and paste this one. If you do that, then you will download an Excel file. If you click Excel file, then data looks like this. So first one is date. You can ignore this, and then they are all data. From here to this is the data. Okay. What I want to do is calculate mean, average, variance, standard deviation of the data at each column. Okay. So you already learned, actually last week you learned how to update data, right? How to read the data. I suggest you to save this file as a CSV format first. Okay. And then use read CSV. Okay. So instruction, hint. Okay. Try help with CSV. The same. Yeah. Type. Okay. In A R. Okay. Is everything clear? So you have two homework. To the write the code for numerical integration again, and to the preliminary data analysis. No question. Young, do you have a question? You think you unhappy? You look very, very unhappy. What's wrong? You should be happy. You are learning new software, very powerful and very practical software. Okay. What did you say about your goal? Did you say you want to be a CPA in the future? So you are a CPA candidate, and then also you are academic candidate. What is your goal? Investment bank. Okay. I'm pretty sure even if you become a CPA, if you know R, there will be a lot of chance to use R. Okay. In accounting firms, they have to analyze a lot of data. Using R will be much more easier, convenient than using Excel. In investment bank, of course, R is useful. Of course, if you just do the sales or trading, R is maybe not important, but if you do some research or investment banking division, R can be helpful. To study more, you have to know both of you. It is very important. Right? You should know R. Or at least other sophisticated program languages. Yeah, and last week I also gave you another homework, which is about, let's go to Google group again, and then bring your research question relevant to the investors. And no one actually replied to this. So, okay. Anyway, Let me check one by one. So, what is your research question?
I thought about it and I want to figure how Japanese earthquake will affect to Korean coffee.
Cospi, okay. Let me write it down. So, okay. Please write down your research question. Come here. Yeah, come here and write down here. So why is it important to Korean investors or investors in general?
Because like huge event like earthquake in Japan is it was like out of people's how can I say?
Yes, I understand. The question is earthquake already happened and Kospi already responded, right? So what is the point of analyzing earthquake impacts Korean Kospi rate?
Because like after the earthquake, I think Japan will recover from the earthquake. Like there will be like huge. I think there will be like a boom in Japan's economy because earthquake will eventually work as like creative, innovative disruption.
Okay, so it means that, okay, so basically we have to make our research interesting to the potential investors, right? So it means you have to go over past earthquake, right? Japan had another history of
Kobe.
Yeah, Kobe. So you analyze how each event affects Korean stock market, and then you can make recommendations such that if earthquake happens again in future, what we have to do.
Okay.
Do you agree?
Yeah.
Okay.
That's what I meant.
Okay, that's what you meant.
Yeah.
Okay, thank you.
Yeah.
Actually, every research question should be inquisitive form. So, how would Japanese earthquake actually earthquakes in Japan would affect Kospi. Korean Kospi is affect just Kospi, okay? Kospi index. Okay. Next, J. Yes, type.
Value.
European one. World Korea.
Korean economy.
Economy. Okay.
European economics, no. European 경제학, no.
Ah,
European
okay, sir.
economy.
Economy. Korean economy. Economy. Special Olympics.
That's fine. Yeah, I think everyone knows what peaks means.
Okay.
Right, do we have two G's?
I
One is
think,
Greece and what is another G?
I'm not sure, but about 5 days ago, I run the peaks, and the professor says five. I'm not sure, but okay. Peaks.
Why don't you do the Google search? Okay. No, peak crisis.
Okay, just pick Portugal and Ireland, Greece, Spain. Done.
Okay, so that's fine. This research question is fine, but the thing is that it is too broad. Okay. How European economy, how peaks. Okay. What aspects? I mean, economy of the peak. It has many elements, right? Like sovereign debt,
Then
fiscal situation or monetary situation, and there are many variables in peaks economy.
Yeah.
Do you think you can analyze everything and
No.
find the implications to Korean economy everywhere?
Then I will think it. I will make it more specifically. Then I mean, I will think more and
Yes, please.
I will shorten
Yes.
this.
Please narrow down your
Okay.
research question so that you can write a paper within this semester. Okay. Good. Yeah. Please leave it as it is. Okay. Good. Next, Sanchal. Okay, pretty straightforward. Thank you. Next, 여기. Yeah. Here. Okay, good. Please. Okay, so please bring one to next week. Okay.
Okay.
Am I right? And then 현정. Yes.
I've been several questions and I did not decide.
Oh, okay.
I need to talk about this with you in
Okay. So, but please prepare one research question until next week. Okay.
return. I bring up,
Oh, you have research question. Okay. So please write it down. Okay.
but I did not decide about
Well, then write down everything.
everything.
Yeah. Every potential research question you have. And then we can discuss schedule. Okay. To help you.
몇 개는 번역을 안 했는데요, 영어로.
That's fine. You can write in Korean if you want. which one is
I don't know exact word in English, but do you know dim sum bond?
this one is food.
Dim sum bond is also
it's a
exists.
bond.
Mm.
Okay.
Like this.
Okay. So what stocks are related with change in global population? Okay, first. Okay, so you have 3 research questions. 1. Generally, what do you mean by generally?
Many people say proper inflation is going to invest in stocks.
So what is the proper inflation? What is the proper inflation?
Last Wednesday I went to kind of lecture. Then the lecturer said about 4% of inflation is going to invest in stock like Samsung or ASD.
Okay. Actually, X stocks. Okay, what is your opinion? Hyunjung has 3 research questions. Which one do you think is the best? Actually, inflation is very important, especially forecast on the inflation is very important information. Okay, for bond investor actually. So whenever people expect inflation rate increases, then bond price go down. Okay, otherwise bond price go up. So I'm not sure what do you mean by proper inflation, but I think that can be a good research question. Okay, but second one, which one is better, renminbi or dim sum bond? Do you think you can get a data about dim sum bond?
I saw one article about dim sum bond, but I have to research about it and research about that.
Yes, you need a data about dim sum bond to do the research. And which is stocks related to change in global population. That is too difficult. Okay, that is a huge topic. So, if I were you, I'll choose out of first 2 questions. Especially, I'll choose the second one if I have data about dim sum bond. If I don't, I'll do the first. back to discussion. Okay, I'll give you another homework. Find one, okay, at least one example, okay. Okay, you have to bring it. Relevant to your research question. Okay, basically, you want to demonstrate that. Okay. Important. Okay, is it clear? This is fine. I think you already have idea where to find the information. For you, obviously, any recent newspaper article about Japanese earthquake would be relevant. And for you, it depends on your research question, but I think there will be a lot of articles about that. Good. And actually, also in addition to that, in addition to the newspaper article, please try to do some initial effort to find your data. Okay? Think about which data you want to use and where you can find the data. In your case, we are together dim sum bond data. I think in your case, there is no problem of getting the data. For you, it depends on which aspects of the text you want to focus. We're not Byung-Chul, by the way. Possible rebalancing is, of course, as the name implies, it is a way, it's a practice of changing weight. Okay, weight of the portfolio constituents. Okay. One obvious portfolio rebalancing strategy is buy and hold. Simply construct portfolio initially and don't do anything. Okay. It is called buy and hold strategy. But the buy and hold strategy is actually, it has limitation. Okay. The better an asset performs in the past, the more portfolio weight it will receive. Okay. Which means that suppose you have stock and bond, and if the stock performs very well and bond performance is relatively stable, then in the end, your portfolio will be mostly composed of only stock. So it will lose any diversification benefit. Possibly you will lose diversification benefit if we just stick to the buy and hold strategy. It leads to drifting portfolio mix because, depending on performance of the individual weight, individual asset, the portfolio weight automatically changes. The portfolio weight basically drifts. So we need rebalancing alternative. So that's sometimes fine. You can simply do the buy and hold, but problem is that most of portfolio managers have a mandate. Right? So mandate means, although we frequently think that portfolio managers basically can't do anything about their portfolio, but that is not true. Like bond manager there's requirements that some portion of their portfolio should be invested in, like government securities or investment grade, something like that. So if we do just buy and hold strategy, then may violate portfolio manager's mandate. So then, if buy and hold strategy is practically infeasible and even it will lose the benefit of diversification, what we should do, then we should do rebalance. There are many ways of rebalance. First one is calendar rebalancing. So SM mix is rebalanced back to policy benchmark, monthly, quarterly, yearly. Suppose you wanna hold equity and bond 50-50, then depending on their performance, their rate would change as time goes by. Then you wanna go change it back to the original 15-50%, like monthly, quarterly, or yearly. Another one is range rebalancing. In range rebalancing is there are two approaches that can be used to keep the portfolio within certain range of the benchmark at all time. First one is rebalancing to the allowed range. This assumes that the asset mix does not depart from the extremes of the allowed range, but makes no attempt to return to benchmark at any time. For example, consider 60% benchmark in equities and with 5 percentage point of tolerance. Okay, so it means we have a range of from 55 to 65, right? This signals a sale of 1% when equity reaches 66% of the asset. Okay. Another one is threshold rebalancing. This approach assigns much more weight to the wisdom of the original policy. Here, a move beyond the tolerance range of the original policy, okay? Beyond the tolerance range dictates a return back fully to the policy benchmark. So, in our hypothetical institution, with the 66% equity weight and the 6% benchmark would reduce its equity commitment by 6% of the asset in the same situation. Right? And the third one is tactical rebalancing, which I want to focus. Okay, tactical rebalancing is this enhancement to the rebalancing process. Simply recognize that the optimal period or range to determine rebalancing events is not static. It has the powerful ability to allow the portfolio mix to drift longer and farther from the benchmark during the trending period, and to rebalance frequently and with a tight effective range during the mean reverting time. Okay, so when we expect stock price to go up and up, we allow, okay, the weight on the stock drift away, okay, increases. But if I said returns are mean reverting, which means that when today it goes up, then next period it goes down, something like that, then we want to rebalance it very quickly. Right? Because if a portfolio suddenly increases, it means that its past performance is good, and if performance is mean reverting, then we expect portfolio return, the asset performance, okay, will deteriorate, so we have to go back to the original as quickly as possible. So that's the tactical rebalance. So tactically, basically, based on our information and strategy, we want to flexibly to the rebalancing. It's tactical rebalancing. Another one is drifting mix, as I explained. Okay, one might choose to go with the flow, drifting with the market. Using a buy and hold strategy. The sponsor who adopts this non-strategy, okay, the basically does nothing, so it is basically non-strategy. Okay. Non-strategy runs the risk of not meeting these funds' liabilities and ignore the probable risk aversion of his committee, like investment committee. So, if a portfolio drifts away too much away from the benchmark, then maybe a couple of assets will receive too much weight. Then basically we are exposed to the risk of asset. So maybe there is not acceptable to the investment committee. Anyway, one could reasonably expect very long-term returns approaching those of equities. This would occur over several decades as the portfolio drifts further and further into the equities. I explain this more shortly. So for example, over the 50 years ending in December 1999, a portfolio which began with 50% stock and bond mix in 1950, with stock dividends reinvested in equities and bond coupons reinvested in the bond, would have drifted into a 98% and 2% mix by the end of 1999. So basically, this portfolio converges to pure equity portfolio, not diversified anymore. Okay? This is basically based on the real data. Anyway, accordingly, the drifting mix would have delivered returns approaching equity market returns and risk comparable to stock market index. It's natural, right? Because eventually we will only have stock in my portfolio. So therefore, this might be inappropriate given policy benchmark. In this case, policy benchmark probably like 50% of policy benchmark for stock and policy benchmark for bond. There are a couple of tables. So global rebalancing strategy. So suppose we can do that monthly, quarterly, annual rebalancing, and they are like annualized return of our portfolio. Okay, and we can do maybe range rebalancing to the range or to the benchmark and drifting things like this on their performances. And standard deviation like this. So as you see, if we do the drifting mix, standard deviation is much bigger than the other. Okay, maybe not much bigger, but anyway, larger than the other. Because they lose diversification benefit. And this is information ratio, and as you can guess, given the annualized return and standard deviation, information ratio is higher for the rebalanced portfolio than the drifting mix. Okay. Do you know what is information ratio? What does it mean? Information ratio is actually very important performance indicator of portfolio or mutual fund. Okay, so if suppose you want to invest in mutual fund like 적립식 fund, okay, suppose you want to buy them, the first thing maybe you want to check is information ratio. Information ratio is basically so it is basically ratio. So nominator is actually average historical, basically average of excess return of by our portfolio over benchmark. Okay. So if we invest like mutual fund about Korean stock market, the likely benchmark, probably the benchmark is like Kospi Composite Index. If we invest in Japanese market, the benchmark is likely to be Topix Index. In US, it's likely to be NYS Composite Index. So, given the benchmark of your portfolio, how much you bid is the denominator. And denominator is basically standard deviation of this one. Standard deviation of this part. Okay? So basically you want to beat and you want this ratio high as high as possible, which means that you want your portfolio to beat the benchmark, but with minimum risk from the benchmark. Okay. So the best portfolio would be something like this. It closely follow the benchmark. It moves exactly the same as benchmark, but beat the benchmark like constantly in every moment. Like cost B plus 2% something like that. That would have like infinite information ratio. And domestic US rebalancing, okay. Asset classes, okay. Suppose about equities, okay, equities and equities, US equities from 1968 to 2000. US equities has annualized return about 12%, standard deviation 50%, and return risk ratio is 0.8. This is equity allocation, so it's just the equity, so it is 100. About US bond, annualized return is about 8%, standard deviation 10%, return risk ratio 0.82. Okay. Now let's consider the portfolio strategy, rebalancing strategy. First one about drifting mix. Drifting mix is, suppose we have 50-50 of each and do nothing to the end, then eventually, okay, eventually my equity is like 74%. On average, my equity has like close to 60%. Okay. So it converges to equity only portfolio basically. On the other hand, if we do like monthly rebalancing, quarterly, annually, or to the range, to the benchmark, then it performs far better. The risk return ratio is higher than the others, and the equity allocation on average at the end point and on average it is close to 50 and 50. And then we can do like global asset class rebalancing. Basically, it is similar here with global equity portfolio and global bond portfolio. Basically, if we do that's very interesting. Global bond is very good. Return and risk ratio. Anyway, if we do the rebalancing, then it has higher return risk ratio than the others. Okay, then the drifting mix. And if we don't do anything, okay, if we just do the drifting mix, even if we invest globally, in the end, we have equity weight close to 70%. Lose another diversification benefit. So rebalancing is important. Portfolio diversification means, okay, we do the portfolio diversification to enjoy diversification benefit. And to enjoy that benefit, we have to keep rebalance our portfolio. Okay. And then, of course, we will focus on tactical rebalancing because investment strategy means that you want to do some tactical rebalancing, given your portfolio based on some information like Japanese earthquake. We want to change weight appropriately at that moment, so we want to rebalance our portfolio tactically. Let's go to our next topic. This is my own research. Okay, and actually the data about next week homework, it is about this paper, about the paper I'm about to present. Well, in the end, I expect you to replicate this paper with the given data eventually. So let me explain my paper. And in addition, actually, my paper is also about investment strategy. So it is kind of example of investment strategy. You can use it as an example of investment strategy, which means that you have to write something like this as well. for your term paper. Actually, it is joint work with one of the asset management company in Seoul, in Yeouido, the largest asset management company in Yeouido. It is joint work with a quantitative investment team in the company. So tactical asset allocation with Korean investor sentiment can it generate excess performance after adjusting risk and transaction cost. So actually, title of my paper is basically research question. So can we generate excess return or benchmark or risk adjusted after risk adjusted or even transaction cost? Can we generate excess return, excess profit using investors' sentiment? That's my research question. So let me elaborate my research question. So it means, can asset managers generate significant excess return enough to cover risk and transaction costs using investor sentiment? Okay. I mean, one finance theory usually says that if we take a lot of risk, we can generate a lot of return, right? Or to generate high return, we have to take a lot of risk. So there is always a trade-off between risk and return. So I want to generate investment strategy that breaks the trade-off. I want to generate excess return even after we take into account those risks. So I want to generate excess return that is not simply compensation to the risk. And in addition, whenever we do the trading, we have to pay transaction cost. Okay, it is obvious. Okay, if anyone has any experience of trading yourself, okay. But do you trade any stocks? Could you please raise your hand if you have any experience, any opportunity, or no? You never invested in stock before.
Just mock trading.
Beg your pardon?
Mock trading.
Mock trading.
It was in our curriculum, one class.
Which class?
Banking investments. There is enrollment in the DIS.
Oh, okay. Anyway, mock investment is not enough. Okay? It is free to open an account. You can go to Shinhan and then I suggest 키움증권. Okay, I think everyone has Shinhan bank account, right? So go to the bank account and just say I wanna open stock trading account with 키움증권, and they will open an account for you. Second, whether and how does investor sentiment affect asset pricing outside of the US? Basically, there is a similar research in the United States, and I want to check whether investment is very relevant variable to construct investment strategy in Seoul, in Korea. What is your guess? There is some findings in the United States that sentiment is actually important in the United States. Do you think that finding will hold in Korea as well? Actually, that was my guess. I strongly believe yes, because I believe that Korean people are more emotional. Korean stock market is more sentiment driven than US market. So that's my guess, and if my guess is right, investment strategy that worked in United States can work even better in Korea. And actually, that is my finding, and my finding suggests that investor sentiment is useful for asset managers to produce significant excess return outside of US. And of course, this brings up another question: what I mean by investor sentiment? The sentiment in Korea is a 기분, right? 기분, 감정. Anyway, investor sentiment is actually important topic because investor sentiment, defined broadly, is basically belief about future cash flow and investment risk that is not justified by the facts at hand. Okay. So any asset price is basically function of two things, right? Future cash flow, expected future cash flow, and risk. Right? If we expect high future cash flow, and asset price go up, and if risk is high, asset price go down. Right? So any belief related to the asset pricing, which means basically related with the future cash flow and risk, and then is sentiment, right? So sentiment is not scientific in some sense. So not justify the facts at hand is sentiment, investor sentiment. So any feeling, right? Sentiment, some feeling not justified by the fact and can influence asset pricing, that is investor sentiment. And investor sentiment is actually already influential concept in practice, like J.P. Morgan publishes their investment confidence index in order to quantify how much investors feel confidence in investment environment. And State Street is another very large asset management firm in the United States. State Street has similar investor confidence index to capture the attitude of investors about risk. And in academic research, many papers also demonstrate that investor sentiment is a significant issue in both corporate finance and asset pricing. And there is to summarize, there is consensus in academia and in practice that investor sentiment is important. Actually, to tell the truth, I already did a similar investigation in Japan about Japanese market. When I was working in Tokyo, my boss told me to develop some strategy, investment strategy based on Japanese investor sentiment. And I developed a strategy in Lehman, and it worked. And I thought that my work may work in Korea as well, and I tried, and it works even better. Okay, then. Let me ask you a question. Okay, there is consensus that investment sentiment is important, okay, in finance, okay, in investment. Okay, and I want to ask, why investment sentiment is important? Why do you think, through which mechanism investor sentiment can affect asset pricing or investment strategy? Anyway, why investor sentiment matter? 현정, why do you think the sentiment matters? Why 투자자 기분 is important? Here, can you guess why sentiment is important? Jay?
I think all investments are operated by people, not a machine. So the investor sentiments are very important part of the investments. So, yeah.
Yeah, my question is, this may be true, but how? How does it change asset prices? In which aspect that is relevant to the actual investors?
I think investors' sentiments affects investors' view how a situation or like company is optimistic or pessimistic.
Okay, so again, investor sentiment is basically not justified by the facts at hand. So suppose investor sentiment are optimistic, and what's going to happen in stock market?
They will invest more their money
Then
to the market.
which means
They will-
what's going to happen to stock price?
Stock price will.
If people are happy, suppose investment sentiment are high, okay, it's different for happiness. But suppose investors are very happy, then what's going to happen to the stock market?
it will go up.
It will go. That's our first guess, right? But again, investment sentiment is not justified by the facts. So suppose you are sentiment driven. Half of you are sentiment driven investors and half of you are not sentiment driven investors. And so half of you are sentiment driven and half of you are rational. And suppose the rational people know that investors are happy now and stock prices go up, then what are you going to do? What rational investors do you do? Okay, if stock prices go up, keep going up without any scientific or without any justifiable, without any sensible ground, okay, what are you going to do? Do you want to buy stock or sell the stock? You want to sell the stock, right? So it means that although half of people are quite happy with the sentiment and they may have happy sentiment, maybe they drive up stock price, but other rational people want to exploit that opportunity, right? So if they believe stock price is high just because people are happy, then they will instantly sell, right? And which means that market will balance, market will go back to equilibrium, right? So that in the end, stock price should go to the initial price. So if there is rational people and sentiment-driven people and rational people respond very well, then actually even though sentiment-driven people drive up stock price, that does not last, right? That opportunity should go disappear very quickly, right? So it means that, so in order to relate investor sentiment to the investment strategy, we need some story about that. Okay, first let us investigate through which mechanism investor sentiment can influence asset pricing. Okay, behavioral finance has been working to augment the standard model with an alternative model based on two basic assumptions about sentiment. So we are talking about investor sentiment. So it is not rational theory, right? So we are going to behavioral theory of finance. Behavioral finance is actually hard. Very hard. And the most influential paper in this area is actually Baker and Wigler, 2006 and 2007. So this investment sentiment, this kind of research is actually very new and kind of state-of-the-art technology, strategy in investment. And it summarized two channels through which investor sentiment generate cross-sectional variation in stock return. Okay. First, sentiment-based demand shock. Investors value some stocks maybe more subjectively than others, And subjective valuation is more likely to be influenced by speculative demands originated from varying investor sentiment and emotion. Okay. So this means that some stocks are more subject to sentiment than the others. Okay. Can you guess which stock will be more influenced by the sentiment than the others? What kind of stock will be more influenced? I mean, just a guess, okay? There are a lot of stock in Korean stock exchange, and what kind of stock will be influenced by sentiment than the other? Like a big stock or small stock, or what? Okay, we have to go back to the definition of sentiment again. And sentiment is basically subjective, right? It is a belief about return and risk, right? So if there are some stock that is more, suppose there are two stocks, and suppose one stock is very easy to do the valuation, and other stock is very hard to do the valuation, and which stock will be more subject to the sentiment? So what do you think? Easy to valuation and hard to valuation. There are two stocks, and which one will be more affected by sentiment?
Hard one.
Hard, why?
Because the stock that can be easily valued is the value is known, so everyone knows the value, but the one that can be hardly valued is there's like more space to guess, and I think the optimistic view can.
Exactly. Yeah. So what is the value of $1? Right? Value of $1 is $1, right? So that's very easy to do the valuation, right? $1 is $1. And whether people are happy or not, still $1 is $1. And suppose there are other stuff that is very hard to do the valuation, which means that there are more room for subjective valuation. So if objective valuation is very easy, possible, then sentiment is maybe not important. On the other hand, there are stocks that affected by the valuation is very subjective sometimes. That kind of stocks will be influenced more by investor sentiment. Therefore, when investor sentiment fluctuate, those subjective stock with subjective valuation will fluctuate as investor sentiment fluctuate, right? But the other stock with objective value, they will not respond much, right? Then there is a trading opportunity, right? When the stock with the subjective valuation goes up a lot because of sentiment, then we will sell this and we will buy stock with objective valuation, right? And people are very depressed in that case, and people are not happy. And so the stock with subjective valuation will lose a lot of value. In that case, we want to buy those stock and sell on the other. We want to sell those stock with objective valuation. So let me take another example. So I think nowadays, maybe not now, but Facebook, market value of the Facebook is almost as large as the market value of Hyundai Motor. And which one do you think will be more subject to subjective valuation and therefore investor sentiment? Facebook and fundamental. What do you think? So, I mean, people believe it or not, Facebook, which is simply a web page, it is as much valuable company as Hyundai, with a lot of cars and a lot of land, plant, inventory. And the question is, which one will be more subject to the investor sentiment? Why? Yes, of course, Facebook, but why? Okay, Facebook has huge market value, so it is basically value of the asset that Facebook has. What kind of asset Facebook has? Facebook has. Okay, Hyundai Motors, they have asset, right? Okay, inventory, a lot of cars, and land and plant. They have a lot of tangible asset. What Facebook has?
Just website.
Beg your pardon?
Website.
So what is the
Software.
so everyone can make a website, right? So basically the value of just making a website is close to zero. And maybe they have a couple of servers. Right? So which means that they don't have a lot of tangible assets maybe. Then what can explain the huge market value of the Facebook? Right? Basically they don't have much. Right? Even though we sell Facebook, we chop up Facebook and sell to other people right now. The web page value itself is very small, and the couple of computers is what?
Every aspect of
Our society. Okay. Okay, what do you think?
Facebook has have more possibility to make future cash flow. Many people think they make future cash flow from their service,
Yeah.
and they have some manpower. So when people think those things will make their stock.
Yeah, so basically Facebook doesn't have much right now. But because people believe Facebook will make a lot of money in future, right? Again, stock price is discounted, value of discounted cash flows, right? Which means that even though Facebook doesn't have much, there is one web page and couple of computer, not couple, maybe huge servers, but some servers, but so they don't have much, but because people believe that Facebook will generate a lot of cash in future from Facebook users, maybe. That's why stock price of Facebook is so high. So most of the asset value, most of the market value of the Facebook is actually the growth opportunity. And growth opportunity that Facebook has. We also call it growth option. And then to do the valuation of Facebook properly, we have to compute the value of the growth option that Facebook has. Right? The possibility of the future cash flow of Facebook. And then it will be very hard to do the valuation. Right? And therefore, it is likely that Facebook is more subject to the subjective valuation and therefore more likely to be influenced by investor sentiment. Okay, another important variable we need to argue. The investors cannot easily construct out the part of the stock. This sustains stock price deviating from fundamental value. Remember my previous example. Suppose there is half sentiment-driven investors and half rational investors. Even if sentiment investors drive up the stock price, if rational investors can keep sell those stock. Okay, then stock price quickly goes to the proper level, right? But maybe that is not possible in many cases. Rational investors, it is possible rational investors cannot short sell, okay? Cannot simply sell those stock very well. Okay? Sometimes it is very expensive. That can sustain the stock price that is driven by investor sentiment. In addition to that, there is actually variation among stocks about the difficulty of arbitrage. Some stocks are more easy to do arbitrage, and some stocks are very difficult to do arbitrage. Like Samsung Electronics, actually we have to use example in the United States. For IBM, maybe it is very easy to do the short sell the IBM. Right? So if IBM stock price is very sentiment driven and it is high stock price high now, then many people can actually short sell IBM stock. But if there is very small firm in Nasdaq, for those small firms, maybe those stocks are not very liquid. Therefore, those stocks are not very easy to do the short sell. Okay, short selling is important to do the arbitrage trading. And for those stocks, it is more difficult basically to do the arbitrage. So if one stock is easy to do the arbitrage trading and the other stock is not easy to do arbitrage trading, then those stock that is difficult to do the arbitrage will be more influenced by sentiment, right? Because rational investors cannot do the opposite trading. To summarize, there are two channels that sentiment can influence asset pricing. One is some stocks are valued more subjectively than others. In another case, some stocks are more difficult. They are more difficult to do the arbitrage trading with. Yes, there are variations in those two levels. There are variations to the extent that investor sentiment can affect those prices, which means that we will have possibly investment opportunities because of these two channels. And therefore, this investor sentiment can affect the stock price through these two channels. It means that our investment strategy should be based on those two as well. I'm sure how. Any question until now? Okay, let's do some theory. Okay, suppose we can sort stocks this way. Some stocks are very safe and easy to do the arbitrage stock, easy to arbitrage stock. And then if we go this way, and some stocks are more speculative, which means more driven by subjective valuation and therefore sentiment, and difficult to arbitrage stocks. Okay, if we sort it this way, then when people are happy on the high sentiment, the valuation level should look like this. People are happy, people are willing to trade, willing to trade into the stock with subjective value, and people buy those stocks, and those stocks are not, those high price is not easily arbitrated away, so people will flock to these stocks. So relatively, those stocks, safe, easy to arbitrage stocks will be neglected. People will have more interest in the area. When people are happy. And people have low sentiment. Okay? People's sentiment is low. In that case, of course, now people don't want to buy those stuff. People move away from this. So valuation level of those are pretty low. And on the other hand, people become more conservative. Therefore, those stuff price will be higher. Okay? So this is consistent with the theory. Basically, it is a restatement of the previous theory graphically. Graphically presentation of the previous theory. Okay, given these theoretical effects of investor sentiment on different types of stock, and suppose somehow you can measure investor sentiment, which means that suppose you can know whether people are happy or not at this moment, and how can you construct the investment strategy? Suppose you know this pattern, and suppose you know investor sentiment. Then what kind of investment strategy will you construct? Here, please try. I think it can be a good exam question for 논술, 수시 논술 problem as well. Briefly explain the sentiment theory and show this graph and ask students to develop 주식 투자 idea, something like that. Just imagine you are taking a 논술 시험. By the is there anyone who took 논술 exam and entered this department here? No? Okay, no. Okay. So no one took 논술 시험. Okay. Anyway, please try. Use your brain. Okay.
Could you explain the question more?
Okay. My question is, okay. This is not question. I just ask you to develop investment strategy based on this pattern and your knowledge about investor sentiment. Jay, can you get?
My investment strategy.
Yes. Suppose you are a hedge fund manager and you know this theory and you have some indicator of sentiment. How will you make money?
If I am a manager, then I will use statistic data, especially CSI. So if the CSI index is high, then it means people are happy, so they are willing to investment to the market. So then subjective stocks will rise up. Then I will wait on that stock. However, inversely, I will buy objective one and versus.
Okay, let me make the question more simply. Let me ask you a simplified question. When people are happy, which stock will you buy and which stock will you sell?
Speculative.
Buy or sell?
I invest in buying. If I'm a buyer, I buy more speculative stocks.
And suppose you are a hedge fund manager and you want to make money. Okay, if you want to make money, and if you know people are happy, in order to make money, which stock will you buy, and which stock will you sell?
I will buy objective stock, safe stock, and I will sell speculative stock.
Speculative stock, right? And when people are unhappy, okay, people's sentiment is very low, which stock will you buy? So say you are almost right. I think maybe my question is a bit too obvious. Given this pattern, right? When people are happy, right? When people are happy, okay, valuation looks like this, okay? But when people are, because sentiment doesn't last. Right? People's sentiments change frequently. Right? Happy people sometimes can become unhappy. Unhappy people sometimes become happy. Right? The sentiment changes. Sentiment is fleeting. So when people are happy, valuation looks like this. But I know people may become unhappy shortly. Right? And sentiment actually change very quickly. Right? In that case, because in expectation of unhappiness, okay, I will buy this stuff because they are undervalued, right? And they are overvalued. Right? So I will sell this and buy this. In that case, when people become unhappy, then I make profit like this and profit from here. Right? And when people are unhappy, right, then valuation looks like this. Right? And I know maybe sentiment can change. In that case, I will buy those stocks and I will sell those stocks. Right? So that's the basic investment strategy. We are almost done. Right? The next question is simple. Next question is how to measure investor sentiment and how to identify which stock is this and which stock is this. Right? Okay. So our next step is to implement this strategy. We have to classify stocks maybe to this 10 level. We want to know this extreme stock and this extreme stock, right? And we want to know whether people are happy or not. And based on that intuition, we want to trade this and this, right? Maybe stock at those levels are maybe not that useful. We want to know stock at this level and at this level. And of course, we have to somehow identify the sentiment. Okay, how do you think we can measure the sentiment? Any idea?
Check CSI.
CSI. How? Why this is sentiment?
Because
What is CSI?
I'm not sure to the full name, but I know this is a
It is not CSI Miami or CSI.
customer sensitive index.
Customer satisfaction index. Something like that.
Almost same as PSI, 기업 실사 지수.
Okay, maybe that is anyway. I know what I'm trying to say. Maybe there is one possible option. So basically, we use survey, which means we can ask people directly. Okay, that is your idea. Similar to asking directly to people whether are you happy, and we can ask 100 people whether they're happy or not, and if majority is happy, then we can say, oh, sentiment is high. You can ask people directly. What is the alternative way? Okay. Before thinking about measuring the sentiment, let's go over our intuition again. Bacon Wiggler. So reasoning suggests that investor sentiment can have a larger impact in asset pricing at some countries than others as well. You know, I wanna investigate stuff outside of the US, right? In US there are already similar research, and I wanna expand that in more elaborate way in Korean market. Okay, if a stock market, basically I wanna apply exactly the same logic as before. Okay. If a stock market receives less attention from sophisticated investors and restrict arbitrary trading more than United States market does, investor sentiment should generate large impact in the stock rebalancing. Tactical rebalancing is a way of rebalancing portfolio dynamically in order to generate excess return based on short-term market prediction. Right? Sentiment is short-term, it is fleeting. Therefore, if we use sentiment and want to do portfolio allocation strategy, it is basically tactical asset allocation. Right? So it means that we want to use tactical allocation to exploit investor sentiment. Since investor sentiment can be temporary and with stock price to vary without any change in fundamental values, therefore tactical allocation is an ideal technique to test the potential of applying investor sentiment in investment strategy. There is my logical flow to justify my research. My research is about Korean market, and I think Korean market, stock market, is an ideal site for this type of experiment. First, Korean stock market has received less attention than developed market, but important enough to be practical to global investors. Like FTSE promotes South Korea to develop market index only very recently, and MSCI keeps the country still in emerging market. Okay, so FTSE and MSCI is like global benchmark. It's usually benchmark for European investors. Use benchmark usually for American investors. And Korea is included in developed market FTSE index, but not included in the MSCI developed market. Which means that Korean market is maybe in the border, right? Important, but not that it is important enough to the investor, but basically receive less attention. If Korean market receives less attention than other developed market, of course it's likely that fewer analysts will cover Korean stock, which means that fewer number of experts will follow the Korean stock. Therefore, more amateur investors will invest in Korean stock, right? And they are more likely to be affected by sentiment, which means that there will be more chance to make money in Korean market. And second, actually there are several restrictions against the arbitrary trading. Okay? MSCI assesses Korea unprepared to join MSCI developed market index because of the accessibility issues such as less active offshore market for Korean won and limited onshore and currency market. That makes trading very difficult in Korea from the perspective of global investors. This forces global investors to conduct pre-fund trade. Such accessibility problem clearly make arbitrage trading costly in Korean stock market from the perspectives of global investors. In addition, Korean stock market when short selling, it is very difficult to short selling in Korean market. Since the trading scandal in 2000 and more strongly from the recent financial crisis. So what I'm trying to say is Korea is the ideal site for the experiment the sentiment-driven strategies. And I think my research is important to both practitioners and academic researchers. First, about professional, it is obviously important because my research can basically tell how to make money in Korea. It is maybe important to the practitioners. Practitioners interested in Korean market can replicate our strategy to enhance their investments. Our strategy are very generic, so that practitioners can easily apply our strategy to invest in other markets. And that's actually what I will ask you to do as well. You will replicate those strategies, and I will provide you the data. Second, based on rigorous framework, it is extendable to technical allocation problem in Korean market. This suggests that investor sentiment is also important and useful to asset allocation in other countries than US, and therefore make and rigorous finding robust in international setting. So I believe my research has implication to both practitioners and academic researchers. Any question until now? It's kind of a very busy slide. And maybe this is the way I measure the investor sentiment. Problem is of investor sentiment. Investor sentiment is not easy to measure very directly. Of course, I can ask people directly as a survey using survey, but survey is not so preferred method in economics. And even if I ask people and I doubt whether I can fully believe those answers about the sentiment. So I have to, instead of asking people directly, I have to find alternative way to find out the sentiment. So to find out alternative way, to develop alternative way of measuring sentiment, what we use is actually basically proxy. Which means that although we cannot measure sentiment directly, there must be variables. There must be variables that is highly correlated with the sentiment. Right? So instead of looking at the sentiment, by looking at investigating those variables closely related to sentiment, we can get some information, right? So what we are going to do is to collect those proxy variables that are likely to be influenced by sentiment. And those are the proxies. First one is number of listed company. So number of listed companies. So how many companies are listed in stock market? And by measuring the change in the number of listed companies, I think we can measure it. I think that is possibly correlated with sentiment. Can you guess why? Why the number of firms listed in Korean stock market? Why that will be correlated with sentiment? Can you guess? So two lists of companies in the stock market, what should we do? So yesterday, number of companies in Korean exchange is 100. And today, I find that there are now 101 companies traded in the Korean stock market. What happened over the one day, do you think? Can you guess? What happened overnight? Okay, two list of companies you have to do the IPO, right? Do you all know about IPO? Do you know IPO? Oh, how about you? You know IPO? Hyung, do you know IPO? You never heard of it? Jay, what is IPO?
Initial public.
Initial public offering. What is that?
First market. You make stock and bond. Issue bond and stocks.
Okay, so how many corporate finance class did you take until now?
I took the financial management.
Okay, and so 재무관리, right? And what else?
Well, I took the 금융시장회계.
This is not corporate finance. Jay, how about you? Could you please name all the finance classes you took until now?
Just financial, just 재무관리, maybe I think, and other classes are related with accounting.
Oh, accounting. I see. That's the problem. Which class are you taking? Which finance classes are you taking? What finance classes are you taking this semester?
투자론 and this one. And this one.
How about you? You too? I see. Okay, that's fine. You can learn IPO today. Okay? IPO is initial public offering. So when a firm needs money, okay, what they have to do?
Issue stuff.
Yeah. Either issue stock or issue bond, right? They have to borrow money. There are two ways to borrow money. One is, roughly speaking, there are two ways to borrow money. Through bond or through stock, right? If a company is not listed, listing a stock means that I want to borrow money from the public, right? From now. Maybe that company is already some stock and they privately sell those stock to some more people. But now, after initial public offering means that now they want to make their people publicly available. Their stocks are publicly available and publicly traded. Okay? So basically, initial public offering means company put forward a lot of new stock to sell in the general public. Right? From the perspective of firms, okay, so their job is to issue. What they have to do is they issue fewer number of stock, but raise a lot of money, right? Where they can sell 10% of stock to the public, they can open 10% of the stock they have to the public or be publicly available, but instead they wanna bring a lot of money possible. So they want to lower the percentage of stock they want to sell, but instead they want to bring as much money as possible. Right? In that way, they can bring more and more cash. Right? And so therefore, very initial public offering is a company wants to sell, okay, their stock to the market. Okay? When you want to sell something to the market, when do you want to sell? You want to sell when people are happy or not?
Happy.
Obviously, you want to sell stuff when people are happy. Obviously, firms are saying they want to sell stock to the public when public have a high selling want. Right? When people are happy. In those periods, maybe they can, given number of stock, maybe they can bring more and more cash. Right? So it means by tracking the number of stock in the stock market, by tracking IPO, maybe I can capture some element of this sentiment, right? Or, of course, IPO is driven by a lot of other factors like regulation, a lot of numerous things like tax, new stock market system, and everywhere. But at least we can reasonably guess that sentiment can also impact activities of IPO. To do the IPO better, firms should take into account sentiment. Right? So by tracking IPO data, maybe I can capture some element of the sentiment. Second one is implied volatility. Do you know implied volatility? Implied volatility is basically it is the, roughly speaking, it is the fluctuation of stock implied by option prices. Yes. So it is basically information people's guess implied in option price about the future fluctuation of the stock. Okay, right? Future fluctuation or future risk or future uncertainty. Right? So therefore, when implied volatility is high, right, it means that people have a lot of concern in the future. Right? People expect a lot of volatility in the future. When implied volatility is low, it means that people have very low concern. Yeah. So therefore, It means that maybe volatility index, implied volatility implied by option may capture some element of the investor sentiment, right? What do you think about implied volatility of the Japanese market now? Do you think it should be high or low? Again, implied volatility, people's expectation about the fluctuation or risk uncertainty in the future. In current Japanese situation, there's a threat, right? Nuclear or people are concerned, people are panic, right? Therefore, we expect that now there is huge implied volatility in the Japanese stock market. And actually, yeah.
I learned the implied volatility is calculated by past stock price. So how?
No, actually, so yes. Basically, implied volatility calculated from the current option price, right? And we need, so in order to do the option pricing, we need information about volatility. And then, so usually we use historical data, historical volatility, as a proxy for the future volatility to do the option valuation. But if we already know option prices, then basically volatility and option prices have one-to-one relationship. If we know option prices, then we can guess implied volatility. Right? And if we wanna know option prices, then we have to know about volatility. In that case, we can use information on past fluctuation. It's slightly different. Implied volatility is calculated from those options, the price of which are available. V-Kospi index, there is an index called V-Kospi. V-Kospi is basically, so there are a lot of options in Korean stock market, right? And there are a lot of traded options. And in each option has each implied volatility. And we collect those implied volatility and we can make an index of implied volatility. And that is V-Kospi index. Because implied volatility measures people's concern, people's expectation about uncertainty in the future. Sometimes this kind of volatility index is also called the fear index. Okay. Korea we have V-Kospi index. In US we have VIX index, VIX. Any question on that? Why don't you call it a day? And then maybe it is too much for you at this point. So why don't you call it a day and resume class next week? Any question about today's class? No? Okay. Thank you. See you next.